Thank you for downloading this Real Agriculture podcast. Next thing you know the next thing. Next is Now is a short podcast discussing agriculture's emerging next-gen tech and trends as they're happening in our industry. Next is Now, presented by GFL Ag. Listen where you get your podcasts today.
Sean Haney here with RealAgriculture.com and Real Ag Radio on Rural Radio 147, Sirius XM, every weekday at 4:30 Eastern. And we're joined right now by JP Gervais. He is Chief Economist with Farm Credit Canada. JP, it's great to chat with you again.
Oh, it's always a pleasure, Sean.
Okay, one of the conversations we have annually that I always look forward to is the Farmland Value Report, and it's out for 2023. Overall, Canadian land values up 11.5%. I guess right off the top, JP, we're seeing somewhat of a slowdown in the increase, but there still seems to be some steam in this land market.
Yeah, absolutely. My expectations going in, given what we know about the economic environment for the ag industry, I would have thought that maybe the rate of increase would have been a little bit lower. If actually technically we do have a little bit of a lower rate of increase compared to last year. We had, up to last year, we had 3 consecutive years of the rate of increase going up. So it was an acceleration of the increase in land values. Now, we do have a number that's a little bit lower. It's still double-digit growth in land values on average across the country. I'd say we got about 2 provinces where we can definitely see a little bit of the slowdown. Again, doesn't mean that land values, the market's collapsing, but they're definitely the economic factors that you and I have talked about for a number of years now with regards to higher interest rates, commodity prices coming down. They look to be playing out, but for the most part, across the board, you still have some very, very strong fundamentals in the marketplace.
Yeah, and you look at some of the price of land in Ontario, up 10.7%. That's a there's that stuck out to me. Saskatchewan still going very, very strong, up over 15 or 16%. And you mentioned the province. One of the provinces definitely showing a little bit of we're kind of cooling off here. We're still going up, but we've cooled off on the rate of increase. Would be Alberta, just under 7%.
Yeah, so for Alberta, we did get a few signs that this was happening in mid-year. So now that's not a surprise necessarily to see the year-end result where we've seen the rate of increase slowing down a little bit. If you look at the prairie provinces, you were mentioning Saskatchewan as well, that 15% range. One of the things we like to look at is affordability, right? So you look at the price of land, you make some assumptions about if you were to buy land, what kind of payments you would need, you would make in terms of capital and interest expenses, and compare that to the revenues you can generate off the land. And if you look at Saskatchewan, that ratio is still around, it's at an all-time high, but it's still around 30%, a little over 30%, I believe. And if you compare that to Alberta, again, Alberta average land prices, average revenues, if you think of average yields, average prices, and so forth, you're in that 50% range. So it's not necessarily a surprise to see a province like Alberta, where the rate of increase is slowing down compared to the province of Saskatchewan, where land prices are a little lower, more affordable, and so forth. And you did mention Ontario, still very strong, above 10% after 2 years of roughly 20% increase. And again, that same affordability ratio in Ontario, while you actually are, you have to allocate more than 100% of your gross revenues, what you can gross off the land in terms of capital payments and interest payments if you were to buy land, under some standard assumptions. So land's really expensive, but demand seems very strong. And the reality is that supply is so tight. I mean, there's just not a whole lot available, and that just tends to drive prices up.
We should have pooled our money together, JP, and just gone and bought some land. That's what we should have done. Woulda, coulda, shoulda.
Well, that's that. I think the point being that if you look over the last so many years, more than 10 years, not only land prices have generated land has generated a good return, it's also generated a stable return. So when you think of it, right, you're expected any type of assets, when you're looking at a high return, you'd be expected in return of taking on a higher return to live with a little bit of volatility. But in the case of ag and the farm economy overall, when it comes to asset values, it's been a good return and stability, which is very unique in some sense.
JP, what's going on in British Columbia? It's negative on the board. It's down 3.1%. What's happening?
Yeah, so we have a region, the South Coast region, where, in that valley where land prices have been moving down a little bit. So, and that's to be taken with a grain of salt a little bit, right? The range of values in that region is so high, the largest across all the different regions that we monitor across the country. So it's not a surprise that sometimes you'll get a few sales that perhaps are on the lower end of that range. That tends to bring the average down year over year. So I think things are cooling off for sure. Absolutely. That doesn't worry me too much in terms of the strength of the market. I think demand's still strong, but I mean, we do see a little bit of cooling off from the willingness to pay from a buyer standpoint. And so I think that some of the high values that we have in that area, in that region, sort of explain a little bit of why we have a little bit of a decline.
So who's buying the land? Is it, because what some people will jump to is, well, this is, pension funds and outside, foreign investors. Any insights there on what's driving the land market?
Yeah, so a couple of things. We'll never be sure 100%, like with a precise statistic when it comes to buyers, because it's, we look at sales, not just the sales that we finance at the FCC, but overall sales. But we're never sure to be capturing 100% of all the sales that are happening out there, right? So that's one thing. But bottom line, the quick answer to your question is producers. I mean, it's farming operations that are buying land. Now, we can deny as well that over the last couple of years, there's more and more buyers that are not farming the land. And I would say that range is around 15%. So you'd see a little bit more of that activity in some provinces, a little bit less in others, but around 15% of buyers that are not going to farm the land is what we have in a data set. Those are not transactions that we finance, but nonetheless transactions are in the database. So for the vast majority of the transactions that we have in a database, that's farm operations buying land. But yes, I mean, absolutely over the last couple of years, certainly, and that's actually, we've been kind of just trying to assess this for the last couple of years. We have a little bit more of an interest from non-traditional buyers, I would call that, but still for the most part, farm operations that they're buying.
There's another category though too. It is the farmer being, the farmer of the land, but I don't know what phrase I should use, but like a front, or they have outside investors that are funding the farm making the purchases, and that's hard to quantify too. But that is becoming more of a popular thing in the industry as well.
No, different sources of capital for sure, and I think it speaks to, for me personally, I think it speaks to the outlook that most businesses have for agriculture overall in Canada. I mean, we do have challenges in front of us for sure. There's some things that we have to work towards, trying to get our productivity up and all those type of things. But when you look at the outlook for the industry, the fact is that more capital has come in the industry, and I think that overall is a good thing. Now, it does raise a few questions when it comes to, for example, young farmers or businesses that are trying to establish themselves, expand their land base. Because as I said, I mean, when it comes to affordability in most provinces, we are at a record high in that negative way, in a sense that the least affordable ever when you look at land prices relative to farm revenues, considering where interest rates are. So there's no denying that it makes it harder for young producers, harder for small businesses to expand and so forth. But nonetheless, I think more capital is coming in the ag sector because it's a sector that has a promising future.
Yeah. And the other thing that we have seen in some of our Real Agri Studies work is that although farmers are negative in terms of now being the right time to invest capital, clearly your numbers are showing that the land market is out, outside of some of that negativity. And we've also seen that, farmers, the largest farmers are the ones most interested on intentions to buy land or have bought land. And so it kind of feeds some of that narrative too. I think at the big get bigger, which is, based on the size of the money required to invest here, that kind of makes sense, as sort of you alluded to.
That does make sense. And then your data says it. I mean, if you look at the census data as well, it says it in terms of like what kind of distribution of farm size that we have now in the industry. I think there's no denying that we're trending in one direction. Now, I'm not suggesting it's a good thing or a bad thing. I'm just saying that it's, we are at a point when you look at land prices, and that's the least close, if not in all provinces, in most provinces, the least affordable that it's ever been. So it says something about, how people feel about the future of ag, because I think the need, and then our economies of scale, and we need to optimize how we run the business, and then so forth, and it all gives reasons to buy, and different businesses will have different strategies and different plan as well. So
yeah. If you look at the increase, across the country, 11.5%, and even with drought in Western Canada, we got Saskatchewan up healthy, even with interest rates being an issue, and there's the markets being a concern in the back half of 23 for sure, as they continue to be in 24. It does speak to the fact that overall the farmer is still very willing to invest in something they're not making more of, as my grandpa used to say. It's land.
Well, that's very true on the supply side, that's for sure. Yeah, I mean, if you look at the calendar year 2023, because that's how we work the land value study.
Yep.
If you look at the calendar year in Saskatchewan, receipts of grains and oilseeds and pulses went up 6% calendar year. Now, of course, the back end, or that second half, is going to be a little bit weaker because of some of the dry conditions that we had. And I think if you look at the forecast for 2014, then maybe, and just maybe, this is when we actually see a little bit more of a slowdown. Because if you look at the forecast right now, we're saying basically receipts of grains and oilseeds and pulses could fall by about 14% in 2024. That's because of lower commodity prices. That's because of the drag that 23 production is going to bring into 2024 for the first half of the year. So all of that together, maybe that's one of the years when we have a little bit of a slowdown. Interest rates, we're going to get some relief, but that's going to be towards the second half of the year. And, a lot of operations will still have to price debt at a higher rate than what they have currently in the books. So all of that together, maybe that's, what we're seeing in BC, what we're seeing in Alberta, and maybe a little bit of a kind of a heads up, or kind of a little bit of an advanced warning, kind of a lead indicator of what could happen. But the bottom line is tight supply just plays a huge role. I think that's one of the things. Then when farm income was increasing, we kept, and I did that, I kept saying that, well, farm income, low interest rates are kind of fueling some of that demand. But I think we kind of pushed aside kind of on the supply side. Not only we're not making any more of land, but bottom line is that there's less and less available for sale. And so that's just like when something comes up, there's quite a bit of an interest in terms of bids. So
yeah, good reflection there. Hey, JP, thanks a lot for joining us here today, and congrats on the report, and look forward to looking at what 2024 brings.
Always a pleasure, Sean. Thanks for the invite.